So we look at the fair value today from the Metcalfe's Law model. That gives us round numbers around 50,000. The halving occurs in 3 weeks. What a halving does, it cuts the block rewards, the amount of money that's given to the miner to secure the network. If those rewards were to get cut in half, as they do, many of the miners would struggle. So historically, what has happened, the price rises, the fair value rises. So that would push it at 100. But this time it's a little different in that instead of just block rewards, we get transaction fees because of ordinals and inscriptions. So let's say the fair value only goes to 75 this time. Then post-halving, you get a lot of interest in the asset, a lot of people FOMO in, and we normally go to about 2 times fair value in the cycle. So in the last cycle, fair value was 30. We got as high as 68, 69. This time, I think probably 2 times because there's less leverage. So that gets us to 150.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Mark Yusko, Morgan Creek Capital Management, discusses his outlook for the crypto sector as expects it to continue to grow due to the ETF and more. So without wasting any time, let's dive into the video.
The big move happens post-halving. So the halving occurs sometime between April 20th and April 21st, most likely. So once that occurs, then you start to get an increase in demand, right, from the ETFs and other people interested. But the supply of new coins goes from 900 a day to 450. Well, think about it. If there's more demand than supply, price has to rise. So the price starts to rise. It starts to become more exponential or parabolic toward the end of the year. And historically, about 9 months after the halving, so sometime toward Thanksgiving, Christmas, we see the peak in price before the next bear market.
With Bitcoin's halving event just around the corner, it certainly seems like we're on the cusp of something big. While everyone's eyes are glued to the skyrocketing Bitcoin price and the possibility of record-breaking highs, the ripple effects are far-reaching. They will touch every corner of the crypto market and could even signal an end to crypto's 4-year bull/bear cycle. Yet it's not just about the numbers. It's about the potential for a seismic shift in how we perceive and interact with digital currency. Brace yourself. This could be the beginning of a whole new era for crypto. Bitcoin's value has surged of late, buoyed by anticipation surrounding the upcoming halving event in April, alongside milestones like the approval of spot Bitcoin exchange-traded funds in the U.S. and major financial institutions, such as BlackRock, publicly entering the space. This institutional interest has led to unprecedented demand, with Bitcoin hitting a new all-time high above $73,000 on March 13. This was likely driven by record-breaking inflows into ETF, including a $1.045 billion influx on March 12. This transition marks a more widespread acknowledgement of cryptocurrencies as a legitimate asset category, marking the onset of a new phase in institutional investment. It has also further bolstered Bitcoin's credibility and accessibility to retail investors. These landmark developments enable investors to gain exposure to Bitcoin without the complexities associated with direct ownership. The increased liquidity and stability will likely continue to attract a broader range of investors, driving greater mainstream adoption and helping further fuel the current surge in Bitcoin's valuation. There are, of course, still bears out there. Yet with projections ranging from $150,000 to $250,000 per coin, the Bitcoin market is on the brink of a substantial inflow of institutional capital. This will signal a potential transformation in its historical cyclic dynamic that would drive new levels of growth and innovation across multiple digital asset sectors.
You know, it is so hard because the regulatory regime has been pretty restrictive. I mean, there are the mining companies that secure the network. They've had a really good run, so the valuations are a little toppy, but we do like those businesses. There are component companies that make the machines that secure the network. AMD and NVIDIA have been a story, a proxy to play the crypto markets for about 6 or 7 years. But again, they're at valuation levels that are tough to stomach. There are a lot of really interesting products and new tokens in the private markets. That's where we traffic at Morgan Creek Digital. About 80% of what we invest in are private companies, and only about 20% are in the liquid tokens. But we like things like Ethereum, we do like Solana, we do like Avalanche, and you can go down a little bit lower on the capitalization scale. Bitcoin is the king. It is the dominant token. It is a better form of gold or digital property now, as Michael Saylor calls it. So I do think it will be the best, but the law of large numbers comes in. I think it could go up 10x from here easily over the next decade, but I think some of the smaller projects will go up orders of magnitude more, just the law of small numbers.
For the 20% in the more liquid tokens market, I'm curious, do you just buy and hold, hodl, or you actually treat a position?
And we're a venture capital firm, Morgan Creek Digital, so we're not a trading fund. So we do buy and hold or hodl, but we will sell on occasion. We sold a bunch of our Solana 2 years ago when they ran into problems with the network. We sold about 2/3 of it. Thankfully, we didn't sell all because it's done well. We sold about 3/4 of our Coinbase stock when it went public. And now we hold about 1/4 of it, and we think big things are in line for Coinbase. That's one I forgot to mention. We do like Coinbase a lot. So we do hold mostly as opposed to trade. Great question.
Despite the apparent bullish momentum in the cryptocurrency market, several factors could disrupt this trajectory. Persistent inflation may prompt tighter monetary policies, affecting riskier assets like cryptocurrencies. Sluggish economic growth could also dent investor confidence, diverting attention from speculative investments. Another short-term concern lies in the Bitcoin mining industry. The upcoming 2024 halving event is expected to trigger significant consolidation and defaults, as cash-strapped mining firms will struggle with slimmer profit margins and high operational expenses. This could force them to dump their Bitcoin as they enter bankruptcy, which may keep the price down. Additionally, regulatory oversight and lack of funding pose challenges, potentially exerting downward pressure on prices. Uncertainty surrounding the 2024 elections adds yet another layer of unpredictability. Political outcomes could lead to varying regulatory changes, with potential shifts in the U.S. government's stance towards cryptocurrencies. While a Republican presidency may offer a more favorable regulatory environment, Democrats might become more receptive to the industry due to alignment with values like financial inclusivity and environmental sustainability. This may potentially foster bipartisan support for cryptocurrency regulation. Maybe most tantalizing of all could be the unanticipated secondary effects of the halving. While historically a driver of bullish cycles, the halving's impact may be overshadowed by the other factors mentioned above, such as staggering ETF net inflows. Total net inflows have surpassed $15 billion. The strategic intervention of institutions and retail ETF investors guided by more experienced financial advisors adept at buying the dip looms large as a factor that could potentially dampen the halving's effectiveness in driving the market forward. This would mean the end of crypto's typical 4-year bull/bear cycle, seemingly tied to the Bitcoin halving, and instead suggest a trajectory of relatively stable upward growth, with ETF inflows emerging as the primary catalyst for crypto adoption. It's notable that this is the first time Bitcoin's price has rocketed up before the halving, which in years prior has preceded Bitcoin bull runs. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.